Good morning. It is Monday, July 2nd. Hopefully, everybody had a great weekend, and Canadians are having a great long weekend with Canada Day. Anyways, taking a look at the charts, we're going to see the markets. It could be a little lighter volume today. Canadian markets are closed, so Canadian traders are on holidays, but really we don't have that much power or that much effect on the U.S. markets. But overall, just a note to remember that not everybody is in the game today. Taking a look at the charts, here's the US dollar index. You can see we've had that huge rally. We had a nice bull flag down to the 50% retracement level, strong bounce out of there, and then we got some news out of Europe which kind of really negated all that move, brought it right back down to those lows, and we're seeing it more or less pause here for the past trading session. Now if we just zoom into the chart a little bit, you look here, you can see we've come down into a support zone, but overall this price action is now turning bearish. And you look here, we've got a strong move down, got a little bit of a bear flag forming, and we could technically take this measured move, we would see a new low in the US dollar, and it would come fairly low here down to around the 80 70 80 60 area on the US dollar index. So if we see this US dollar continue to head down, once we break this low, we're going to see a lot of stops get triggered. There's another low down here that could get triggered, and it would make a big move down in the US dollar index, which means we would see another large rally in stocks and commodities. So let's take a look at the commodities first. Here is crude oil. This is the weekly chart. Came down into this support zone. You can see we've seen a huge rally in the last trading session, right back up into this level. Looks as though it's trying to put in a bottoming pattern. Let's zoom into the 4-hour chart. You can see here we came right down, bounced in support, and then we saw buyers step in. Seen a nice run to the upside. We've broken a couple of these previous little highs, broken this previous high, and we're starting to get a little bit of a bull flag forming here. It looks as though it's the inverse as the US dollar index, and of course if the US dollar continues to move lower, then we're going to see probably crude oil start to break out of this basing pattern down at support, which is right. This here is more or less the basing pattern. It's trying to stabilize, find buyers. Once it breaks out of this level, then we probably will see it extend and run over the next week or two, or possibly month. But overall, the next target will be this 100 level up here, which is a whole number. It's a century number, and really that's kind of a key level we broke down from, so naturally it's going to want to float back up to that level. Simple measured move on crude oil. Look at 78, ran up to here. If we get a pullback, depending how far it pulls back from that flag, we'll see the same distance from the low to the high. We'll see that same distance move up here. And if just looking visually, you're going to be somewhere right across here, which is a pretty major level where we had support, became resistance, and that's where the market broke down for another leg lower. So that's naturally going to be the next upward target before it runs into some sellers. Looking at natural gas, here's the 4-hour chart of natural gas. You can see we're testing some previous highs here. We did pierce it. It was a pop and drop where it popped higher on very light volume. You can just see here, I pointed this out last week. Volume was drying up as prices were running right up into resistance. Generally, it's not a very strong sign, and the market makers will try and pop it above it and trigger a lot of short selling or short covering. A lot of buyers to pile in, and of course they'll be unloading into that volume, and we saw it move back down. Now we're seeing it bounce back up, so we are flirting with this level, holding up above it just in the last hour or so. Overall, we're holding up in this basing pattern. If we just look back here, very similar to crude oil. We've got this more or less large basing pattern. Could argue that there is an inverse head and shoulders with a neckline right across here. Of course, we had this little gap that ended up getting more or less filled with this pop and drop, and we'll see how things play out. But overall, it looks as though the market is looking like it wants to put in a pretty big rally. US dollar could really tumble here if stuff starts to get settled out in Europe and the euro starts to get some stability going here, and we'll see the US dollar really pull back sharply. We're going to see stocks and commodities start to rally as other countries start to get things in order and somewhat have things kind of patched up. Looking at gold and silver, here is the 4-hour chart of gold. You can see on Friday we had a nice move up. broke a couple of minor pivot highs, so we've had a pivot high here, pivot high here, so we had a nice run up, and now we've had a little bit of a bull flag forming, light volume, which is a good sign. Next target here you'll see is measured move is somewhere up here around these previous highs, 1640-ish. Again, we've got this red line, key resistance, which each time it's got up there, we've seen strong sellers step in and move down. So overall, I'm starting to look a little more bullish on commodities and stocks as the price action is starting to be pretty favorable. Given that, you got to remember that today the Canadian markets are closed. Again, we don't have a huge effect, but still you got to be a little certain that the moves today aren't going to have all the volume behind them, and it could give you a false signal of what's going on. A lot of times light volume, you'll see the market just kind of drift higher. So we'll just see how things play out, but overall this week I think we'll be getting active in the market, and at this time it looks as though we'll be looking to get long, as the US equities market seems to be firming up pretty strong. Might have some pretty good runs in the next couple weeks, so we're going to be looking for something like that, which I'll cover that in just a moment. Looking at gold miners, gold miners came down. They pretty much hit our target around the 44, 43 area. I was kind of hoping they were going to pierce these lows and run a little bit lower, but overall they've had a nice run up, had a little bit of a bearish pattern, have consolidated this little dip here. There's a little bit of a price action you can see here where you kind of get this market kind of runs and drips off, and you'll see it just kind of slide out, slide the stops, and more or less shake people out, and then it'll start to put in a bottom. This is a kind of a typical bottoming formation. This chart doesn't show it that well. Simply it's a 24-hour chart, and it's 4-hour chart of more or less it's 24-hour trading chart with 4-hour candlesticks, and of course GDX only trades during regular trading hours, so it's a little sloppy, but overall this is a pattern here that's generally forms a bottom, and it looks as though we've got a nice little possible bottom forming, pull back a little bit further today, and from there it could have a launch pad and start to work its way up into the next resistance level, which will be right through this level here. Looking at the silver chart, here's silver. You can see we've had a nice surge to the upside, and it's having a little bit of a bull flag here on nice light volume. Next target looks as though it'll be running right up into around the 2850-ish area, maybe a little higher, but overall if you look at that price level, you got a nice surge to the upside, pull back, take that measured move, you're going somewhere right up into here, and then if you look back on the chart, you've got major resistance, lots of traders, lots of volume going off in this level. That's where it's going to start to hit resistance, and sellers may step back in, but overall on the short-term basis it looks as though commodities want to make a run to their next resistance level anytime soon here. Take a look at bonds. Bonds are still trading within their range. They've been very range bound here for a while, and of course the longer it stays range bound, the bigger the move out of that level usually is. So right now we're flirting with the lower levels. If we see it break down, we're probably going to see it come somewhere down into this level down here, which is the bottom of this next range. If you look at the charts, kind of like apartment buildings, you've got these floors and ceilings of each level. You can just draw them in over and over again. More or less, once you break through one floor, you fall to the next floor and find support, and then of course each floor is a support level. It's the inverse for when you're going up. You hit the ceiling. Once you break through the ceiling, you're going to shoot straight up, hit the next ceiling, likely come back down, hit the floor, and you'll bounce around in that level for a while. So if you look at it as more or less an apartment building, you can just draw in the boxes and the levels, and you can see where the next levels are that prices should hit. So looking at this chart, you can see here I've got a percentage scale on the side here, so just looking at it, we're looking at about a possible about 1% drop in bonds. If they do break down, that's the next level, and then after that there's another level a little further. But this is a futures chart. You can see there's no volume here. Really need to pull up a rolling contract that shows all the volume and gives you better charts. There just wasn't any trading really in this contract back then. Looking at the SP 500 daily chart, take a look here. We had a huge day on Friday, big gap up, ran right into resistance, pierced the highs a little bit, and more or less clearly moving off these moving averages, giving us lots of room above them, and now it looks as though the market it's way overbought on a short-term basis, and I have a feeling we're probably going to see it drift a little bit higher today and sideways. Overall, I do feel as though we're going to see the market trade sideways for a session or so. We'll be looking to likely see if we can get long, and then we're probably going to see the market continue to move higher and higher, and that's kind of what the volume is saying, the chart is saying, the moving averages are saying. And I'll show you the sentiment charts in just a minute, how they're a little overdone right now, but it'll only take one sideways day to really pause the market and rejuvenate it for another move up. Take a look at the futures chart. This 30-minute chart of the SP futures. It's been back several weeks. You can see Friday's big rally in pre-market trading. We saw the market run up huge, and then during regular trading hours the market continued to move up and push higher. Now zooming into this morning, you can see this is Friday's trading session right here. And you can see in pre-market trading we had most of the move happened in pre-market trading. Once the market's open, we saw the market just grind a little bit higher, pushed and closed near the highs. In futures trading last night and this morning, we're seeing them more or less. They pulled back early last night, went sideways. They've pushed to new highs. They're kind of flirting, looking a little toppy, and I'll show you how they look toppy here. Simply the fact that they pushed up, sold down, pushed up, kind of starting to get bumpy up here, and we're a little bit overbought on a short-term basis, which I'll show you in the momentum charts in just a second. But overall, I do feel as though we're going to see some type of pullback, possibly down just to the 1350, maybe the 1340 level, at which point the market will probably pick up and start to run higher. Now looking at the market momentum, let me just pull up this chart here. This shows us the NYSE advancing and declining shares. On Friday we had pretty much everybody, I think it was a ratio about 8 to 1, so there's 8 buyers to every 1 seller, so everybody was running and buying stocks and covering their shorts on Friday. Usually when everybody at a ratio of 3 or higher, which we were at 8 on Friday, usually that shows us you're short-term overbought, meaning there's going to be some usually a pullback the next day, or at least a breather, a pause where traders don't do anything. They let the market kind of catch up and build some strength before a continued move. So this ratio here shows there's a lot more buyers and sellers. Looking at the new highs and new lows, this is the highest level we've seen in a long time. Usually you want to see these new, in a strong uptrend, you want to see new highs both on the NASDAQ and the NYSE. You want to see them way over 100. You'd like to really see them around 200, 300. Overall, this is a good start. The new lows is extremely low. There's not a lot of stocks pushing down, so this is a very strong sign to see this many new highs. It shows that there's lots of money actually pouring into the market and pushing all kinds of new stocks to new highs, which is very important. Overall, it shows there's some confidence in the market. Now looking at the market momentum, this chart here, when we're trading over the 101 level, the market is considered to be short-term overbought for a trading session. When we're trading below the 99, the market is oversold, meaning right now you can see on Friday how high we closed, highest level in a long time. And usually when you close up at this level the next day, you'll see it generally trade sideways or down for a session. Overall, it looks as though we're kind of in a trend continuation, almost like a reversal in a market. So you can see one of these moves continue on for a couple more days, as the market really just has so much momentum behind it that it's not going to slow down. So it's not something you want to try and short, I don't think, in this market right now. Really, we're looking for just a pause or a minor pullback in the market, and we could be just jumping in, getting long, because there could be a lot of power behind this move in the equities market. But overall, you can just see how overbought we are on a short-term basis. We're way up here, longer than we have been in about 6 months. And so you don't really want to jump in right now. I'd like to see some type of pause in the market. Looking at the stocks trading above their 20-day moving average, there's mixed signals here between this chart and stocks trading over their 50-day. You can see here we're trading up at a level. Once you break the 75 level, this is when the market usually becomes fairly toppy. You've got to be very cautious trading. There's intermediate tops that usually last. You'll see the market sell off for several weeks at a time. So we are right back up at that level, just kind of jumped up there. But the good news is, if you look on the longer term chart, which is stocks above the 50-day moving average, we're still down at the 60 level, and we can go all the way up to more or less 75 and all the way up to the 90. So we could just see this continue to grind higher. So if you just look at this chart visually, it looks as though we could have about a month-long rally in equities of kind of chopping and grinding higher as the euro dollar slowly strengthens and we see the dollar actually start to decline in value. So it's going to be an interesting couple weeks as things unfold, but overall it looks as though the market is shifting to the upside. We're a little overbought right now, but first pullback or pause we might be looking to get long for this market. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.